welcome to Commodity Champions, your weekly dose of what's brewing in the commodity space. I'm Manisha Gupta. Let's start with the most sparkling commodity, and that's gold. Prices have seen some pressure today, but the week has been quite bright for the yellow metal. Prices have dipped on fears that the Federal Reserve may hike interest rates in the upcoming policy, which might trigger a shift in cash flow to riskier assets. Domestic demand in the meanwhile has seen a surge in Feb, with imports up by nearly 80%. Demand is also rising as cash flows return to normal and the wedding season kickstarts in India. However, a correction in gold is expected to be shallow as investors see gold as a hedge against global uncertainty and rising inflation. So what does the demand picture look like as we go ahead? For that, we are joined by Alistair Hewitt, who's Head of Market Intelligence at World Gold Council, who joins us now in London. Alistair, hi, good to have you. First of all, the kind of run-up that we saw in the gold prices, a near 3.5-month highs in this week itself, and the correction subsequent to that. What is your sense? I mean, there are so many factors which are impacting the precious metals, but what would you want to keep an eye on?
So far this year, we have seen a very good rise in the gold price, and I think there are three factors underpinning that. Firstly, you've had a very good Chinese New Year at the start of the year. Demand was buoyant around there. And as you mentioned earlier on, the Indian wedding season's been coming online recently, and we've been seeing a steady increase in demand from that source. But crucially, we've seen inflows into gold-backed exchange-traded funds increased by about 95 tonnes this year so far. And this is money coming from institutional investors. And when we do our field research, we speak to these guys to understand why they're increasing their exposure. And there are a few factors. Firstly, you've got the political situation, and a lot of people are looking towards Europe and the elections in Holland, France and Germany, and the uncertainty that's going to create. You also have concerns around currency and potential currency weaknesses, and obviously the political situation can affect currencies. And if we switch across to the Atlantic, there are some investors who are seeing emerging signs of inflation, and at the same time some stock market valuations which are incredibly frothy. And I think all of those factors are kind of underpinning the investment case for gold, and people from across the world, from India through to the US through to China, continue to want to increase their gold holdings to protect themselves against the uncertainty.
So, Alistair, what is your sense then? Even with the Fed rate hike, a 78% chance of that on March 14th, would you say that the gold has nothing to worry about, and this perhaps has been factored in?
So I can't talk specifically about what's going to be happening to the gold price, but if we just look back at recent history, the gold price fell to a low of about 10.51 in December 2015, just before the US increased their Fed rate for the first time in about 9 years. We had an increase in December 2015, and many people in the market are expecting an increase in March. But over that intervening period, we've seen the gold price go from 10.51 up to about 12.27 when I checked before I left the office this morning. That's a 17% increase in the gold price. So to me, that says that the gold market can take any increase in US nominal interest rates in its stride, and the factors driving gold demand and the gold price are far broader than just US interest rates.
So, Alistair, tell our investors or viewers on how would you look at the gold as a part of a portfolio with the kind of scenario that we are in right now and more uncertainty than earlier. How much of a portfolio should really be in gold? Because the kind of returns that we have seen in the last couple of years actually have been positive.
So I view gold as an insurance asset. It's there to protect your wealth against the threats of inflation, currency weaknesses, anything going wrong in the financial system, bank collapses, that kind of thing. So gold is very much an insurance asset. And when we speak to the large institutional investors and we undergo portfolio optimization, and we look at the mix of all their assets, equities, commodities, bonds, other assets, and including gold, we find that the optimal allocation is around about 10%. So when I think about holding gold, its primary function is wealth preservation, a store of value, and diversification, and an allocation of around about 10% makes sense.
Alistair, while of course we keep talking about supplies and demand, and supply isn't really something that we touch upon when we talk about gold, but what is your sense? Because there are various reports suggesting on how the supplies in gold have been increasing, and the demand really hasn't been keeping pace with that, because the Asian demand, as we've seen in last 12 or 13 months, really hasn't been in what it used to be.
So I'll just very quickly pick up on Asian demand. And last year was a tough year, there's no doubt about that. But we are slightly more optimistic for 2017. If we think about India, India was affected by a number of policy initiatives and the high gold price. When we look towards 2017, we've got the tail effects of a good monsoon last year. We've got the effects of the policies coming through to make for a more efficient economy, and those factors should support Indian gold demand in 2017. Similarly, in China, we're expecting investment demand to pick up there. So whilst Asian demand has tailed off recently, we think the market is in decent shape to increase over the coming years. But supply is a really, really interesting point, and it doesn't get talked about a lot, but it is very interesting. If you think about mine production, that's the most significant source of gold come into the market in any given year. We've seen increases in mine production in recent years, but the outlook is for mine production to plateau, and there are many analysts looking at the gold market expecting mine production to decline in the coming years, and that's largely a function of the cost cutting that mining companies have gone through since 2013. So whilst the headlines will talk about demand and what's going on in the US, I think an interesting subplot is going to be what's going on in mine production.
Your point is well taken, Alistair. Thank you so much for coming by and making sense of what has been happening in gold supply and demand numbers for us. So that is a view coming in from World Gold Council. The Indian demand is expected to surge in 2017 is the big one coming in there. And of course, your 10% of portfolio should be in gold is yet another advice there. But with that, it's time for a short break. Coming up next, we will discuss on why the metals are seeing a wild rally this year, and if this is the right time to include base metals in your portfolio.